If you want to know if a stock is worth your money, you don't need a PhD. You just need a simple checklist you can use every time. Today, I'll walk you through a practical, no-fluff way to analyze stocks. You can use this with any company and start making better bets today. First, decide what you want from a stock: growth, value, or a steady dividend. Knowing your goal keeps you from chasing hype and helps you pick the right tools. Spend 5 minutes on the business, what problem they solve, who buys, and what could threaten them. If you can explain their business in one sentence, you're ready for the numbers. Next, look at the money basics. Check revenue, earnings, and margins. Look for steady growth and margins that aren't collapsing in hard times. Then, check the balance sheet. See how much debt the company carries and whether interest payments are easy to cover. A rising debt load can hurt in a downturn. Now look at cash flow. Free cash flow shows real money left after capital needs. Positive and growing FCF is a good sign even if earnings wobble. For valuation, compare price to earnings and price to sales against peers. If a stock trades at a high multiple with weak growth, it may be expensive. Also, look for consistency. Check the 3-year earnings trend and how often the company beats expectations. Quality firms show steady margins and predictable revenue. Always consider risks and catalysts. Every stock has risks. Look for what could change the story, like a new product, stronger competition, or regulatory changes. Here's a simple 5-minute checklist you can use now. Create a 1-page list: the business idea, revenue growth, margins, debt, cash flow, and valuation. As you read the report, fill in the boxes and note any questions. Let's try a quick example. Imagine Widget Co., a maker of basic gadgets with 12% annual revenue growth for the last 3 years. Its gross margin is 42%, operating margin 18%, debt is modest, and free cash flow is positive. Its price to earnings is 18, while peers trade at about 20. Its price to sales is 1.2, which is reasonable for this growth rate. If you compare to peers, Widget Co. looks fair, not spectacular, but the story still depends on momentum. If next year revenue slows or margins compress, the stock could fall even if the business stays decent. That's why the checklist asks for both money and growth, not one alone. To put this into action, pick one stock you like and pull the last 3 years of numbers. Fill your checklist and write 2 sentences on why it could work. Do the same for a similar company to keep you honest. Avoid common mistakes. Don't chase hype and don't rely on a single metric. Don't fall for a good story without checking the math behind it. Learn the basics by reading the annual report summaries, listening to earnings calls, and following a small set of reliable sources. Focus on the money and the strategy behind it, not the buzz. Set aside 20 to 30 minutes each week to update your numbers. Add one new stock to your watch list if it passes your checklist. Stock analysis is about simplicity and patience. If you can explain why a stock should work in plain terms, you understand it. Use peer comparisons to stay grounded. If everyone loves a stock, that doesn't automatically make it a buy. Prices swing with mood as much as with facts. Don't let short-term drama derail your long-term plan. Remember the plan. Understand the business, check the money, value it simply, and watch the risks. Do that and you'll make smarter, calmer choices. You don't need fancy software to start. A few trusted sources and a simple checklist work just fine. If you want a faster start, set a specific goal for this week and run the checklist on 3 stocks you already follow. Compare them side by side and note which one looks best on the numbers. If you found this helpful, like this video, subscribe for more simple stock analysis, and leave a comment with a stock you want analyzed next.